Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are taking a look at Meta Platforms Incorporated, ticker META. I don't think I've ever looked at this one before. It has somewhat been on my radar. I'm liking what I'm seeing now that I actually look at it. As you can see, essentially across the board, 660 seemed to be a good value for it. Retained income model's a little bit lower, but current price 661.5. My fair value 662. Discounted cash flow 670. Even the moving average on the stock is right about. This is definitely a very strong company fundamentally with some great growth. I'd call this a growth stock for sure, and a definite market outperformance. We can start with the earnings. Earnings yield 4.61. You're not quite getting great value on the earnings front. You'd want like $33 in EPS for that, but that is what you're looking at for next year. So it's not way off. It's pretty close. And when you get to the price to earnings growth, current PE is 22. For a stock that's growing at 25%, that's really good. Earnings growth rate 16.3, which gives you a price to earnings growth of 1.37. So as of today, maybe a little high, but with the growth that they're expecting, just fine. Still, maybe just a little high if you're going strictly based off the earnings. Cash flows are super strong, 22.9 on average 26, so they were up in the last year. And these are things that they continue to grow. They had a down year in 2025. If we take it from 22% to 15%, we go look at this, it's a bit more in line. That definitely looks better. That did change our fair value, though. That dropped the fair value to 646, and it brought down those discounted cash flows. It all comes down to what you think that they're going to spend in capital expenditures. If they're going to go something like an Amazon sold way off from their earnings because they were going to spend $200 billion in capital expenditures. Google's looking like they're going to spend almost all of the money that comes in. If the return on investment and assets is good, that's not the worst thing in the world, but it does bring down those cash flows. At the end of the day, those cash flows are what really rewards investors because they can go towards share buybacks and dividends. Speaking of dividends, they started paying a dividend in 2025, $2 per share. We'll see if they continue to grow that. There's definitely room to. Their payout ratio is 8.5%. For a dividend stock, we like to see that 30 to 50. Off their expected earnings of this year, that's only 6.8. So there's plenty of room to grow it if that's something that they decide that they like to do. And I want to see at least 10% growth, which means taking that $2 per share to $2.20. If your revenue is growing at 20%, you definitely have the ability to do at least 10 if that's something that you're focused on. ROE is great, almost 28%, and debt to equity is not bad, 0.68. So like what we're seeing there, balance sheet seems to be in good standing. Returns are solid across the board, 17 for ROI, 16.5 for ROA. Gross margins at 82, on average 80.7, net margins of 30, on average 29.2. So they did have a solid year this last year. Now we can come down to the thesis. Already adjusted some things, talked about what we were seeing. Revenue seems very stable, somewhere between 20-25% growth over the last 3 years and projected out for the next 2. So 22.5 definitely seems like something reasonable to put here. Share count, they've been buying back shares, slowed down a little bit these last 2 years, 1.1% over the last 3, 0.6 over the last 2. If they're going to slow it down, we can take this down to 0.5% and be a little bit more conservative with things. That takes us to cash flows. We already adjusted because I had the cash flows coming in below revenues already, but they are doing more capital expenditure clearly, so had to adjust that. Assets consistently 25 to 26, 25 for the thesis here. Liabilities 35 to 39, 37. Like I said, dividends, I want to see at least 10. Margin, minimal growth. So that gives you annual growth of 23.4%. Once you factor in the dividend, you're looking at 23.7. This over here doesn't really matter because you're already outperforming the market. This is more for a dividend stock. Maximum price that I'd be willing to pay to perform in line with markets after dividend and everything else is factored in. So with all that, starting at a fair value of $646, you're looking at a value of 540 or 946 in 3 years and 1,338 in 5 years. If they can continue this for that time frame, which means you're outperforming the market by almost double in the next 3 years and 2.5 times in the next 5, just about, which means buying at today's price, a little elevated from the fair value, but not really an issue because you're still getting 44 and 104 compared to buying at the fair value. You're getting 48 and 109. So you're sacrificing about 5% if you just want to get into it right now and you don't think it's going to go any lower. And then that would put my price target for the end of the year, aka fair value plus growth, just shy of $800. Clearly, this is a stock that meets my criteria and I would be interested in purchasing. So I'm actually going to be purchasing some this next week and keeping an eye on it to see if it continues to go lower because it's on somewhat of a downtrend right now, along with the broader market. But the question is there AI risk to it? Because a lot of the sell-offs going on are AI related. If you are charging per seat, if AI is raising productivity to a level where you need less seats, that's less revenue for a company like Microsoft, who we've seen a massive sell-off in. Is that going to hurt Meta? No. I mean, what Meta sells is ads. They have different platforms that different generations use. I know older people tend to use Facebook, younger people tend to use Instagram. I'm not sure that Threads has really become super popular. The only platform that I really see ads that truly interest me is Instagram. When I'm on Instagram, I've made some impulse purchases. At least 3 times I've seen ads and be like, ooh, I want to buy that. And I just buy it right then and there. They make it easy. Their AI knows what you like and gives you targeted ads. So it's a benefit. But now I want to look at the charts and see what the setup is like technically for them. Here we have the chart for the stock. And before we get too deep into this, there is this analysis section here. We can see what professional analysts are saying. They're saying 76 say it's a strong buy. No one's saying to sell or that it's underperforming. Some say just hold, see what happens. Few say, yeah, you might want to pick it up. Their price targets, like I said, mine was about $7.97 for the end of the year. Currently, fair value around $6.50. And what analysts are saying, on the lower end, $700, on average, $8.60, and the highest analysts are saying $1,140. So they have some massive growth expectations on that high end. But I'm in line with the average, maybe a bit lower, a bit more conservative with my numbers, which plays into my favor. It's on a bit of a downtrend at the moment. When we look at just the last week, it looks like it was stair-stepping down almost every day, traded sideways for a little bit, and ended the week around that 660 level, dipping to as low as 646, just about the fair value at 10 a.m. on the 6th. And it rebounded from there, trading back up to 660 by the end of the day on Friday. So I'm definitely interested in watching it this next week and seeing if it has pressure to come down, because when you do look at the RSI and the MACD, which is what I tend to use for my trading, like it has that upward momentum right now. It's been going for a little while. You'll start to see a shift back to the downside, and then you'll see some downside momentum, and it continues to swing either way. I mean, the RSI isn't too extended at 57. Like a little bit of a dip will bring it back to normalized, and then if the bulls are in control, you'll see this thing continue to trend up. So what would look like is this extended line here will go off the low. We had a touch here, and I just want to make this a white line. We could trend up. There's this big resistance here around 680. Like when I zoom out to a longer time frame, 6-month time frame, we've had quite a few touch points around there. It broke above. It had to gap to break above to that high that we've seen lately. You scroll the way out to 1 year, and that line was being used as a support back here halfway through 2025. So it broke above here in early 2025 off earnings. It was at that point resting for 2 days. Earnings popped it through, and then once that earnings hype faded, came right back down to it. Next day, broke below, retested, came back down. And then it came through with momentum again halfway through the year. But when it did that, retested, came close twice to retesting it. And then once it broke back below, gapped down. So that's a very strong line that I'm seeing there. Look, again, it came down, essentially retested, came really close a few times, broke above off a gap to this high here, came back down. Why'd it come down? Earnings and the broader market trend. So that's something that I'm watching. If it's moving to the upside, I think it's going to stall out, have some trouble around that 680 level. I'd be looking at selling some call credit spreads, probably investing that cash into the shares, investing with other people's money. And if it breaks to the downside, I'm definitely going to be buying heavier at the fair value. So if we see a dip, and actually, let me do this downtrend as well. We have this tighter time frame. So it hit its peak there, came back up. So I'm going to use this. That was kind of an extreme. So we touched there. And we're basically in the middle of this wedge. Which means on Monday, we're going to see what happens. It'll probably find some support around the VWAP. So, if it goes down, it'll find a bit of support at 659 unless there's news to really take it past that. In summary, what I'm seeing for this one, I like the stock. Fundamentals are good. Technicals don't look too bad. So I have my line. If it goes up and I decide to trade, and I have one to the downside to buy, which means I'd probably do put credit spreads around 640. So that way, if it comes down, I can collect some money, invest into shares. I wish I had the money to just sell cash covered puts. I don't think I want to put $65,000 into a position, considering that my entire portfolio is only $104,000. But someday I'll be able to do that. But I want to thank you guys for watching. Please like, enjoy the video, comment what other stocks you should take a look at, and subscribe so you can stay up to date with everything. And I'll catch you next time.